What's going on, y'all? Welcome back to the Mining Pod News Roundup. We've got the usual gang here, myself, Will Foxley, Matt Kimmel, and a new addition to the show, Nick Hansen, CEO of Luxor. Nick, or another member of the Luxor team, will be joining us twice a month to go over some data that they're seeing on their side, adding a new segment to the Roundup. But for today's show, we've got a bunch of different news items to get through, some more interesting than others. We'll be starting as usual.
Don't sell ourselves short. Okay. These are all great items.
Yeah, I mean, we couldn't talk about a fire in Iowa because we don't have time. But
that was kind of a boring one.
Yeah. But anyway, we'll be starting as usual with the difficulty update with the Matt Kimmel. Then we'll be moving on to a story that we broke today or this week at Blockspace, where creditors are suing Compute North about a year or so after the bankruptcy case was closed. Then we'll move into Phoenix expanding into North Dakota with a 50 megawatt facility. Nick's going to go over some of the data that they have at Hash Rate Index for kind of a 2024 year in review on a bunch of pretty important data points. We'll be looking at Canaan's newest home mining line, the Nano 3 series and the Avalon Mini 3. And then for this week's Cry Corner, a Ethereum software wallet that said they were never going to actually integrate Bitcoin stuff, but it looks like they might be doing that in the future. So we will hop right into it. But first, a word from our sponsors.
Are you a retail or institutional investor interested in Bitcoin mining companies? The Miner Mag brings you free data and analysis from all major NASDAQ-listed Bitcoin mining operations to know who stands out. Check out visualized metrics and data-dependent stories at theminermag.com. Thanks for listening to The Mining Pod. Want more? Subscribe to our main feed on Apple, Spotify, YouTube, or wherever else you get your podcasts for another weekly show on Bitcoin stocks. And check out our newsletter at miningpod.blockspace.media today.
And we are back. Alrighty. Matt, I'm going to share my screen really quickly. Let you kick it off with a difficulty update. Mr. Network Weatherman, what are we seeing out there?
What we're seeing is a difficulty update looking like in a couple days. January 12th is what the Great Hash Rate Index is showing us now. And a rare downward, very slight, I mean, we're basically even, but 21 BIP difficulty adjustment decrease in what has been basically a spree of difficulty increases for the last, it feels like, couple months. Hash price is coming in at 54.08. That is dollar per petahash per day. The metric pioneered, I believe, by Hash Rate Index and Luxor for gross revenue of the network. And that's what we're sitting. I mean, average block time, 10 minutes, 1 second, everything basically tracking as you would expect based off the statistics. Any thoughts, feelings about this, guys?
Everything's working.
Everything's working. And I hope that this difficulty adjustment stands because it has been a pretty brutal series of upwards adjustments. I'm going to hop over to the difficulty section here. We have had 7 positive adjustments in a row, which I think is like one of the longest streaks that we've had in quite some time. It may be one of the longest streaks going back years. It just like an incredible round of increases, and it's been brutal, obviously, because last year we had the halving. Bitcoin's price has been ripping, but hash price has barely been able to keep up, as Nick will highlight during his segment. But
also think of like the funding that's coming for public miners over the last 6 to 8 months, just billions of dollars of capital lined up to basically suppress hash price is how I'm thinking about it.
We actually had a reporter reach out about why, how is hash rate continuing to grow so much? And it's always like, this is an age old question. Does hash rate follow price, or does price follow hash rate? I'm a firm believer that hash rate follows price. And I think we have enough data to pretty much put that to bed. Overall, like you see, and the reason for that is like, when price increases, let's say we hit 100K on December 5th. That was the first time Bitcoin broke 100K, but So if you went out and bought a bunch of machines, you're like, holy, my Bitcoin's worth, 50% more now. I'm going to go buy a bunch of machines. Well, those machines aren't going to turn on for 6 to 9 months. So really the hash rate that you see coming online today was most likely acquired and all of the plans were put in place for it, 6 to 9 months ago. So I think we continue to see hash rate rip because miners have more money than ever. When I say miners, most of the pubcos, that's where we get most of the data about like who has money, and they're going to just continue to see hash rate rip. I think we might see one zettahash by the end of Q1.
Yeah, that wouldn't shock me too much. I mean, we just hit an all-time high over the last week of 822 exahashes a second on the 7-day moving average. Just an incredible increase over the course of the year.
I got one little anecdote to follow up with what Nick was saying. So there's the mining mafia community on Twitter now, right? And there's a lot of people who are just super amped up on mining juice and just following along with the community there. And the thing that's coming back is like, does price follow hash price or the inverse or whatever? And it's really frustrating as anyone who's been around a while. You're like, obviously, there's only one direction this can go. People are only going to add ASICs to their rack if the price is going up. But for whatever reason, this idea that we need like a certain amount of infrastructure and a certain amount of mining capacity out there to make the price go up continues to come back around. So I would just dissuade anyone of that notion before we move on from this segment. Like just because there's more ASICs on a rack somewhere doesn't mean like Bitcoin price goes up. That doesn't exactly follow.
Why do we think that? Go ahead, Matt.
I was gonna say, what a world it would be if we could hash Bitcoin price into the existence. What a time! Like
Bitmain tried last bear cycle, right? They were dumping those XPs everywhere. It didn't work out too well.
It's like a perpetual motion machine. I just really wonder where this concept comes from because it kind of defies any basic understanding of economics.
Lack of elementary education, my friend.
Yeah. I think it's. I think part of it is just like how esoteric parts of Bitcoin can be. So people like fool themselves into thinking that this is all more complicated than it really is.
Yeah.
When it's just like coin go up, need more hash.
Maybe one day Bitcoin price volatility will be so low, and transaction fee volatility will be so high that it will follow transaction fees even more than the Bitcoin price.
Looking forward to the CoinShares report.
Big true.
Let's jump over to the next story. I think that's me, right? Yeah. No, it's Colin. Creditors.
Creditors sue Compute North executives for breach of duty, self-enrichment. So this was an interesting case that was filed on New Year's Eve. And just for some context here really quickly, Compute North was at one point the largest or the second largest, I think, behind Core Scientific, Bitcoin mining hosting company in the US. They hosted dozens of exahashes for some of the largest companies, including Marathon. And they went belly up in September of 2022. It was the largest bankruptcy to ever hit the United States mining industry. And they went through a Chapter 11, and basically the entire company was gutted. Assets were sold off. Some of their creditors, including Generate Capital, took possession of some of their largest sites, and the company no longer operates. And this was all settled in September of 2023. The bankruptcy took about a year, but now a little over a year later, some of the creditors were not happy with the way that things shook out. So they are filing a lawsuit against the executives of Compute North, looking for additional remuneration. And there are a few juicy tidbits in here. And the basic argument is that they are suing the CEO and co-founder David Perel, co-founder and chairman Peter Lee, the president Marshall Johnson, and a number of other C-suites for breach of fiduciary duties and waste, unjust enrichment, fraudulent transfers, among other charges. Now, David Perel, in a statement to Blockspace, obviously is denying that any of this happened. He's pushing back against these allegations and will no doubt be fighting this in court. But some of the basis of their claims here is, the defendants believe that there was a number of really risky business decisions made, specifically with creditors like Generate Capital. They believe that the Compute North executives took out loans that were way too risky because they were collateralized by their largest sites, i.e. Kearney, Nebraska, and Wolf Hollow in Texas. The other thing that they point out here is that there were like 84 $1 million worth of containers that were purchased without actual operational sites to furnish them with. And one of the other more juicy tidbits is that Peril allegedly spent nearly $1 million on extraneous purchases and charged it to the company credit card, which included nightclubs, lavish restaurants, and strip clubs from Miami, New York to Switzerland to France. So basically the TLDR here is that these creditors believe that in the 11th hour of the company's lifetime, the executives made really risky business decisions that basically imperiled it when Chapter 11 came around and made it almost impossible to recoup some of the capital that was invested, and also that some of the executives, including Peril, allegedly was, wasting away company resources on, let's just say a fun nightlife.
They put the company in peril, huh? Nice.
I didn't even, accidental pun.
Yeah, you did that earlier. No, this is a great story because it's a great throwback to anyone who was paying attention to mining at the time. We won't dig into the story too much with Nick because there might be some NDAs under the cover here. Maybe, Nick?
Well, I mean, I don't have an NDA with anybody there. There was a lot of companies that were involved in that were, public and private companies that were hosted at Compute North. I think, Compute North is one of those stories that, given if hash price hadn't fallen through the floor and they could have gotten just like 2 or 3 more months of that premium hash price, they probably would still be in business today and none of those lawsuits would exist. Core Scientific, another good example. They probably would have never hit BK if that, if that summer, we'd had a little bit more, a little bit better hash price action over the course of that summer. Maybe, and probably only like 3 or 4 months is all that it would have taken. Compute North was hosting HUD 8, Marathon, a bunch of private miners that I probably won't say, but yeah, they were hosting tons and tons of machines. And if they had been able to, basically get a little bit better price action over the course of that summer, most likely wouldn't have gone bankrupt.
And one of the things that this lawsuit alleges, and I've also heard through the rumor mill, is that they didn't hedge their power costs, and that they didn't have locked in PPAs. So a huge part of the lawsuit was also just saying like you didn't manage risk properly.
That's a strategic decision for pretty much every miner, though. That can be, pretty much any miner could be exposed or not exposed. Hedges are expensive, and if you're trying to run fast and try to catch a bunch of upside, like we all thought, Bitcoin was probably getting ready to run, you would run unhedged because you would rather use that capital to deploy into machines and infrastructure, et cetera, rather than putting on a really expensive hedge. So, it's really just a strategic decision. A lot of folks decided to run unhedged. Lots of them decided to run unhedged. I don't know if you guys remember during that time, there were rumors of some of the private miners going BK. Even Iris had their default on the NIDIC thing, and there were it was a bloodbath out there. So Compute North, they definitely were the most levered, but there was a lot of folks that were doing the same thing, and it was just happened to be that bad timing.
It's kind of like a fever dream looking back at this, because 21, 22, everyone was in Miami, everyone was going to nightclubs, and now we see this in paper. It just doesn't look as good in a court document. The night that people would go out, they had a lot of fun, but like in a court document a few years later, it looks kind of bad.
It looks bad when it's happening, I would also say. I mean, and just to your point, Will, the whole nightclub and strip club thing, not to point fingers, but assuming that's true, allegedly,
it's alleged.
Errol was spending money on that. He wasn't the only executive.
Yes, there was a lot of people doing it. Why is this coming out now? Because there was lawsuits at the time. These assets were auctioned off. HUD 8 through the former company that was assumed into US Bitcoin Core took a lot of these assets. But why is this coming out now? Do you guys have any thoughts on that?
It's a really good question.
I'm confused too.
Matt looks like he was about to pontificate there. I don't know. Maybe it's just a matter of the dust has settled and they spent the last year getting an argument together. And maybe it's just moving as fast as they can with the information that they have.
The creditors kind of ganging together and actually deciding a plan on how to get it done. But that's totally not clear to me. I don't know. It's a good question. It is kind of odd to see like the litigation from the bear part of the cycle continuing to come out in 2025.
So you can, I mean, a good example, like Do Kwon, the Luna stuff happened way before all this, and his court date isn't until 2026.
Yeah.
And so I guess this kind of stuff just takes a lot of time. I mean, Do Kwon, there's allegedly 1 million plus affected individuals. So who knows how they unravel that, but still, these things takes a lot of time. Courts move really slowly. Creditors, it's just a slow process. So maybe it's been around for a long time, and they finally got their ducks in a row to actually put together the case. It's hard to say. I don't have really any insight into why it took so long.
Today's show is brought to you by Digital Shovel. Digital Shovel is a leading manufacturer of modular mining pods as well as PDUs and switchgears. Unlike many other competitors, their product is designed and manufactured in North America with a complete UL inspection on the entire unit, not just individual components. Additionally, Digital Shovel is one of the most vertically integrated manufacturers of over 75,000 square feet of sheet metal shop, SMT and wave solder PCB assembly, as well as final assembly all under one roof in Toronto, Canada. Their price point leads the industry when compared to products with rates as low as $69,000 per megawatt for a complete data center with smart PDUs and switchgears. To learn more, visit digitalshovel.com.
Let's go over to the UAE and talk about this story with Phoenix, if you can throw that up on the screen. So Phoenix is a publicly listed miner, not in the United States, but over in the Middle East, in the UAE. But they are deploying mining sites in North America. The most recent headline is a 50 megawatt facility in North Dakota that's now fully operational. The biggest story here is like not only that Middle Eastern money is like pouring to the US through Phoenix in order to mine Bitcoin, like taking advantage of cheaper power rates and obviously like pretty solid rule of law over here, which is why Bitcoin mining has exploded in the US over the last few years. But also that like these capital markets are pretty attractive. So if you look at the US markets, there's about 25 publicly listed Bitcoin miners, and a lot of these miners have started on like the TSX in Toronto, and they try to do the hop, skip, and jump down south to New York and get listed there. There's a lot of benefits in terms of liquidity, just more capital, more interest, more bank analysts are going to work with companies that are listed on there. And a lot of the companies that are stuck in Toronto or stuck abroad, like the Frankfurt Exchange or this one in UAE, will try to move over. So this story here with the 50 megawatts complements one from earlier in December from our friends over at the Miner Mag. Bitcoin miner Phoenix explores NASDAQ listing with the new CEO. They have about 6.9 exahash as of Q3. This 50 megawatts will obviously add on to that. And I know that they have a ton of megawatts in the pipeline, as do other miners. So my question for this one for the group is, do we need another publicly listed miner? And is there a bid for people coming to market? We saw Exodus wallet come to market. This crypto wallet went public. Coinbase is obviously doing very well. These publicly listed miners are doing well, but it is consolidating. And I wonder what the benefit is versus staying private long term. I'm expecting 10, 15 listings this year, probably 5 to 8 of those being miners. So Colin, I'll throw it over to you first. Oh, Nick.
You said 10 to 15 just companies in general, you mean?
Like crypto listings, I should say. Like crypto-related companies that go public.
That'd be a boom. It'd be interesting to see more than just Bitcoin miners, though. Whether or not the market needs another publicly traded company for Bitcoin mining, I don't think so. But I think maybe there's a regional argument to be made. Like Phoenix being active in markets in the Middle East. There's maybe some investor appetite there specifically for domestic ownership of something like that. But at 6.9 exahashes, that's a really tough sell for me. If this were last cycle, you could maybe beat your chest about that. But like that's nuts at this point when you've got the largest miners in the bunch, operating at 30 exahashes and above. The last thing I'll say about this that I think is interesting is, to me, there's some signal on the fact that they're expanding in the US, and, they'll use marketing, mumbo jumbo to say this is about diversification, geographic diversification and stuff like that. But I think that it may be kind of a tell that the UAE market is a lot more difficult to operate in than was originally being discussed. It's a really hot climate. Sand gets everywhere. If you have water curtains to keep the sand away, then you risk corroding your machines quicker because of the humidity. And there might also just not be as much room for expansion as originally thought. So an interesting story, I think, for just a number of trends.
Let me clarify what I was saying there. The interesting question for these private miners is at what point do you get stuck in the middle and it's not beneficial to go public? Because to get to that size where you're a CleanSpark, you're a Mara, you're whatever, the big boys, it's really hard to scale at that point. The amount of capital you need to be able to grow. Look at the convertible notes recently, $500 million up to $1 billion for these convertible notes. That's a lot of money, and that's a ton of infrastructure on the finance side. And for these miners that are stuck in that 2 to 10 exahash size, it's unclear what the path forward is. And would you rather just stay a private miner and not have to deal with this? Is the benefit of going public really there at that point? Or would you rather just be a private company with great cash flows and there's new Bitcoin loan features out there if you need to grow a little bit more aggressively? I'm actually curious for Nick's thoughts on that one.
Yeah. So of course, Luxor is a company that, we are getting to a size where it may make sense to go public at some point. And so we think about this a lot. Don't know if it's on the cards for us right now, really for the reasons that you said. We wouldn't be a Bitcoin miner in the traditional sense. We are a mining services company. So I have some firsthand knowledge, some of the things that are really attractive to public markets. You have liquidity on the stock. It makes it a lot easier to hire people, especially for tech companies like Luxor. They realize okay, I'm not just taking a gamble on private equity, equity that may never be monetizable. There's a lot of private companies out there that make it's really difficult to get, value for the equity that you get in the company. So that's one. Two, you get access to easier capital or more liquidity for that capital. So, for example, we talk about the public miners hitting the ATM pretty consistently, or at least having access to hit the ATM. What an ATM is, they basically have, they issue, let's call it $100 million worth of shares, and they just go and sell them into the market, diluting existing shareholders. But they're able to take that cash on balance sheet and go use it to reinvest. The idea, in theory, is that it's accretive to the business and that you're able to acquire more value per share by doing so. Doesn't seem like that generally turns out to be the case for most miners, but that is, one of the reasons people do it. So there's a lot of reasons to go public. Most of it has to do around liquidity and the ease of use of your equity as an asset. But you start to scroll down the list, especially by market cap and hash rate, and it becomes kind of a no man's land down there. And I'm not going to name any names, but you can go look at the list and just be like, man, how do you ever kind of get to that escape velocity? One of the aspects of being public that most people don't really consider is that it costs quite a lot of money to maintain a public listing, going through all the filings. My job as the CEO of that company effectively becomes, a third of my time is now servicing public market investors and, talking to analysts, maybe even more than 30% of my time. So that really degrades your ability to go out and execute, push new products, new initiatives, and things like that. So instead of going out and building a new feature for hash rate index or the mining pool or whatever it happens to be, spending all this time talking to analysts, going to investor days, flying around and talking to people about why you should buy my equity over some other equity. That becomes a really big drain on the business, and it makes you a lot less dynamic and a lot less a lot less nimble in a market that's that requires a lot of nimbleness. So if you have a playbook like a Marathon or a Riot where you're able to just repeat the playbook over and over again, just add money, acquire more infrastructure, and become a bigger company, it makes a ton of sense. But you do see a lot of companies that try to play that book and end up in this weird no man's land. So definitely a double-edged sword, a very interesting move for a lot of these guys. So
I think Nick hit the nail absolutely on the head there. And I can't, add anything honestly too interesting that he hasn't already said. What I'll say though is if you're an operator of a mining company, the nature of the industry is that it's CapEx heavy, right? And so you need to be able to raise capital. Where the US is the deepest capital markets, and if you're going to go public, you took the words out of my mouth talking about ATMs. You have that option, but on the other side of it, it is going to be resource heavy as a company, and then you're going to constantly have the pressure to deliver shareholder value, right? And so you're going to have to weigh those options. As a private miner, you don't necessarily have the same obligations as a company from a resource perspective. And then, you could potentially just kind of continue the process of going kind of more debt heavy rather than public equity. And if you have good private equity partners as well that are willing to give you more capital, you could go that route as well. This when it comes to Phoenix, what's interesting is maybe they're looking at the incoming, Trump administration and the deregulation and friendliness towards the industry as kind of tailwinds of reasons to potentially, diversify their locations and add more and more in the US. But these sorts of plans have to, I think, are really months in advance. And so who knows, maybe they had some foresight there or kind of reading the tea leaves on what the political situation would look like.
I think, Matt, your point about depth of liquidity in the U.S., that's really the golden goose. The getting publicly listed in the U.S. is really where you're really going to find depth of liquidity. That's where the most active market is, the most liquid, most volume. All of the metrics that a stock look for are in the U.S. market. So getting uplisted to a U.S. exchange definitely makes a ton of sense for pretty much anybody. Really, the only one outside of or I would say inside the top tier that hasn't really considered an uplisting, or at least I'm not aware of one, is Galaxy. They're a $3.5 billion CAD company, and doesn't seem like they're interested in going to public or U.S. markets. But outside of them, everybody's trying to get to NASDAQ.
I can tell you quick. The issue is a certain owner basically controls the entire float, so they have to kind of fix that problem, I believe, before they can really get over. Let's go over to the next segment. Nick, I think you got some data for us to go through.
Yeah, should be sharing the screen here. Basically, just doing a yearly look back, right? So we've got, we just closed out the new year. Happy New Year, everyone! If you haven't heard it already a million times, but if you just look at like the snapshot, so I have this snapshot here. You just look at the snapshot of 24, you see hash price down 45% year over year, but it wasn't that does not tell the full story. I like to think of trading hash price as kind of like trading volatility. So if you've ever looked at the VIX chart, it does trend towards zero, but there's certainly times where there's massive spikes in volatility. Like of course around the halving time, runes mania. I mean, we were still seeing a bunch of ordinal stuff during that time. And then, of course, if you kind of zoom out, it actually zoom in a little bit on the last 3 months, it actually looks pretty dang good relative to where we were in the middle of the summer. Middle of the summer, man, it was oppressive. Mid-30s.
Did you just pull a zoom in on us?
I said zoom in and then zoom out.
In. The price is good.
Zoom in, price is good. Zoom out, price is actually still relatively good, especially if you look at it compared to mid to late summer. Man, that was oppressive. If you were a miner during July, August, September, it was rough because you're looking at low mid 30s hash price, which is all time low. I mean, we hit all time low there at the end of August, or middle of August there, which is that was tough. But anyway, looking at kind of the year over year, kind of parlaying what we see in hash price to Bitcoin price to how the public miners have actually fared. 23 was an awesome year for public miners, but that's because they were coming off of a 75% drawdown. So actually, I would say that 24 is even a little more impressive than 23, just because we actually had already done a 2.5x the year prior, and then continued that run through 24, even with hash price going down by almost 50%. Of course, the companies that were favored the most were those that had a pretty significant hodl because Bitcoin has gone up about 120% year over year. So overall, it was 24 was a really mixed year for miners. Their revenue potential has definitely gone down, but the value of the commodity that they're producing, which is Bitcoin, has gone up. So it's a really interesting dynamic. It's like if an oil producer produced a bunch of oil, held all of it, and now oil is now, instead of being $50 a barrel, it's $120 a barrel. And they held all that oil, but then the amount of oil that they can produce has gone down 50%. It's been a wild ride. So looking at kind of just the year just the month over month end of the year actually looks pretty dang good. Of course, hash price being up. I look at hash price being around 60 is like, that's a pretty healthy number for where the market's at. And you can see that in difficulty adjustments. If we go much over 60, you start to see difficulty adjust upward. You go much below 60, difficulty adjust downward a little bit. I think that's a pretty healthy number for the Bitcoin network right now. Hash price being the dollars per petahash per second per day. But yeah, I think that's where we're at. And then I guess I'll jump in kind of. Actually, I'll wait because we have another segment, but I'm the one that actually has the data for this next segment. So I'll kick it over to Colin for his segment, and then we can go into the Nano.
Actually, Matt, I think you should take lead on this one because we haven't given you enough love this roundup.
Yeah, Matt.
So I'm going to go ahead and get this pulled up here. And Matt, you can tell us all about the Bitcoin mining home heating trend that is sweeping the nation.
Yeah, I think while we're giving Matt love, I'd like a compliment from each of the hosts before we... No, I'm just kidding. Canaan has come out, or Canaan, your potato of choice, has come out with a new ASIC designed to be essentially a space heater in the home. The Avalon Mini 3 and the Avalon Nano 3S. They came out at the Las Vegas conference, CES, that has been making waves and headlines throughout this week. And it just so happens that a special guest appearance, Nick, has been running one of these machines and
unplanned
inside scoop. So I'm looking forward to hearing what he has to say about it. Yeah. So you can jump over to my screen. So there's my little nano heater. It's running CG Miner, and this is just a 5-minute hash rate. It's running at 3.1 terahash right now, 100% efficiency, looking good. Overall, I have one actually running downstairs. It's the 800 watt model. It comes with a really slick app, which I can't demo here, but it's pretty slick. So I have it running downstairs in my living room. I wanted to try it out in a bigger room. Doesn't work on 10 by 20. But in my office, it's great. So my office, I'm in Seattle here. It's really not great weather, low 40s. I have it running in the office, keeps it like 71, 72 in here. Pretty much perfect for a small, like my office is maybe 8 by 8. So works for that and generates what? Do I want to talk about how much it generates? Because it's not much.
Are you happy with pointing that 3 terahashes towards your pool and giving payouts for something that will never hit a block?
How many Satoshis do you get? That's the question.
Let me figure that out.
It's a Satoshi generation machine. He's doing the math live. This is actually how they come up with pool shares. They just put Nick in a chair.
I actually just sit there every day.
It's like that's probably right.
Comes up about 195. Let's call it 200 sats a day. 200 sats a day.
That's not bad.
Fast forward 100 years, and maybe you can buy a beer with that.
100.
Dude. That's we're going to reach dollar sat parity this cycle.
Well, you guys also just signed like some sort of deal with Canaan for that. So are you guys the best place to buy one of these things?
I would like to think so. There's a lot of other distributors, but basically the idea is that we have a retail store for buying hardware, call it ASIC Shop. It's very much, low MOQs already here in the US. You don't have to deal with customs, that sort of thing. So we've got those ready to go. And we have, I think we have a big batch of those nanos coming in soon, and we'll be hitting the ASIC Shop ready to acquire and start heating your small home office. And making some sats while you do it. So that's the deal on the nanos. They're pretty sweet. They're also quite aesthetic. That was the thing I thought was most interesting. It doesn't look like a circuit board and like a server. It looks like a little almost looks like a little actually it looks like a Nintendo Switch kind of. almost. It's about the size of a Nintendo Switch in a case, Nintendo Switch in the case. And it's also really quiet. That's another thing. So like I have it in my office, or actually I have it downstairs, and it's pretty much silent. It sounds like one of the like if you have an air purifier in your office, it sounds like that. So it's basically silent, and they're great.
Is it more aesthetic than this bit axe on this little robot?
That's I call that the bit hammer.
Bit hammer.
Rob Mitchell, formerly of CoinDesk, via the Bitcoin game show. I can't remember what his podcast was, but it got acquired by CoinDesk a while back. He said this was totally unintentional.
Yeah. So for those listening, BitX is maybe the place to take this conversation, talk about some of the other home mining solutions and the alt versions of the BitX. And someone put a BitX together with a little robot and unintentionally made an interesting little configuration here, which we won't delve into too much. Nick, what do you think about like
heat sinks are positioned on the robot's groin and it's extending outward for those who are listening and don't have visual aids.
I'm like just wondering about this market though, because it does seem to be like a little bit of a split. Some people like the home heating solutions. There's the Bit Heat or the something like that.
Heat Bit, Heat Bit. Yep.
Those look cool. There's now the Canaan one, and then there's the other side stuff, which is like this BitX. And I'm kind of on the BitX side because I think it's kind of fun and techy. Do you have a BitX, Nick?
Yeah, I have one as well. Very slick looking. I haven't plugged it in yet. Don't tell anybody. Might be giving. So we have a company retreat in March, so might be using that as a swag item for somebody that does something awesome while we're there. So, but yeah, I do have a BitX. It's also quite aesthetic, actually. This one comes with this special case. So the BitX, I don't know if you've ever used Raspberry Pi. They like make all these enclosures and stuff like that. So you can make a BitX look quite aesthetic as well. It doesn't have to look like that.
Doesn't have to look like a robot erection.
Yeah.
Yeah.
It's interesting to see the Bitcoin mining heating thing still be relevant in 2025. There have been a number of companies that have tried to take a crack at this. It looks like Canaan is solved for two things. The price point, while it's still pretty expensive and you shouldn't expect to ROI it, it's more in line with maybe a space heater that you could get just at like Home Depot or something, especially the smaller of the two. And two, the aesthetics. You know, usually these things look kind of weird or they're just too bulky. And I think that they've done a pretty good job of making sure that this thing is more appealing. And
I can speak to the price a little bit.
What is it like $200-$300 or what's
for the which one is the
smaller one?
The Nano 3S is about $200 or so, 200 to 300. And then the Avalon Mini 3 is 900.
So the
Avalon
price
Mini 3 has significantly more hash rate.
Yeah, the price. The reason I think a lot of the ones that aren't the Canaan Nano are quite a bit higher price is because they're actually taking like S21s, like unsoldering the chips and then resoldering them onto other boards. So that becomes that just introduces a lot of expense just to do that. Where Canaan is able to just take the chips right off the manufacturing line and manufacture the thing the way you would kind of manufacture any other chip and board. And I imagine that over time, this is kind of the first, what I would consider the first real like enterprise stab at this or fully productized outside of like, hacking together S9s and things like that. This would be like the real first stab that somebody's taken at it from the manufacturer level. And so I think price probably will come down. Efficiency may go up a little bit. And you actually will get, I think, it's an interesting first stab. So there probably will never be a large portion of the mining network. Like, for example, this is let's call it 3.5 terahash. That's, you need 100 of them to make up an S21 XP Hydro. And an S21 XP Hydro is, there are people plugging in thousands of those. So the odds of the home miner ever becoming a significant part of the network hash rate is kind of a farce, but it is fun. I mean, it's interesting, it's fun, and it's, for me, somewhat useful.
In the competitive world of Bitcoin mining, one name stands out: CleanSpark, America's Bitcoin miner. At CleanSpark, efficiency isn't just a goal, it's our standard. Our sophisticated facilities are built and led by expert teams who care about Bitcoin and the communities we work in. Scale, we've mastered it. Our large-scale operations have set us apart in the industry as examples of community-oriented building. Our track record speaks for itself. We navigate the complexities of the new economy with precision and with skill, continuously achieving operational milestones. Curious about how we do it? We invite you to discover the story behind CleanSpark's success at cleanspark.com.
We got to go to the crack corner. And, I did think about talking about mining Bitcoin in Greenland, since that's a huge topic this week, but I didn't see any press releases from any shady Bitcoin mining companies out there about that. So we had to dig deep into the bag and talk about an Ethereum wallet. So this news leaked on Twitter. Metamask, which is the largest mobile wallet for Ethereum, or browser wallet, I should say, has put out a senior product manager listing. They're trying to find someone to come in and build Bitcoin, and they talk about integrating runes and ordinals and BTC native assets like BRC20s into MetaMask. So why does this matter? MetaMask is the biggest. Like, most people who have been in crypto for a while have MetaMask somewhere on their browser. They have it probably on their phone. They get a lot of hate for not being the most user friendly, but they're kind of like Chrome or any other sort of like browser out there. They're just big. Everyone has it. The other point that's important here is that they've always stated that they would never add Bitcoin. They are from Consensus, which was pretty instrumental in getting Ethereum off the ground. Consensus whole team launched a bunch of different products, and MetaMask was probably their best one and most profitable one. And they're just like deep ETH people, and now they're capitulating to King Corn Bitcoin. For all the Bitcoiners out here, I think this fits in the cry corner because Bitcoin is becoming more than just Bitcoin. Like, it's becoming this place for various types of digital assets, whether that be inscriptions like on Nick's wall or BRC20s or other things. And people are going to increasingly just see it that way. And I think that's going to change how we interpret Bitcoin into the future. It's going to really affect, I think, the conversations we have around scaling Bitcoin over the next few years. So I think this is probably one of the bigger headlines that we will see in 2025, honestly, if this does come to fruition and they do launch a whole MetaMask Bitcoin product suite. Any thoughts on that? I feel like, Nick, you do a lot of stuff in this sort of realm.
Yeah. So I can speak to that. And I think that one of the things that I have to imagine MetaMask feels like they may have gotten left behind a little bit. A lot of people started using a bunch of different wallets for interacting with things that are not just standard L1 Bitcoin. Standard L1 Bitcoin has got plenty of wallets, but if you wanted to do any of the other stuff, it starts to get much more cumbersome. Looking at Solana, they've got Phantom, which supports Bitcoin, Ordinals, Runes, and Solana as a percentage of market share. I bet that wallet picked up the most. I don't know that for a fact. I just have to assume in 2024. And MetaMask has to feel like, wow, this is there's some avenues for pretty easy growth for us if we go that direction. Looking at BTC-Fi or whatever you want to call BTC DeFi, I don't want to get too much into that, but there's a lot of that stuff that happened this time last year. All of the main nets are coming in Q1, it seems like, and they're all going to require these types of integrations with any of the browser wallets. For example, Babylon. That's one we can talk about. That's L1 Bitcoin staking. Basically, they've taken in 50,000 Bitcoin, which is insane to me. I expected them to get a couple thousand. They got 50,000 Bitcoin in deposits. You can't use MetaMask for it. It doesn't support the types of signatures that are required. So you have to use OKX or some other wallet to actually interact with Babylon and do these types of things. So I have to feel like, MetaMask is feeling like this is a place where we could easily expand into, get on the ground running with a new market and, potentially, be a market leader in this new market, in a new and exciting market that is potentially forming. Of course, there isn't any guarantees that BTC-Fi or BTC DeFi end up becoming anything more than just a pipe dream, but we're in crypto. We're trying to take these stabs.
To me, it's an indication that some people in the Ethereum landscape are like taking a step back and saying, are we really going to actually have the economic activity to support some of these wallets and some of these software implementations? Because Ethereum has been getting destroyed this cycle by Solana in terms of actually being a platform for launching things. I mean, those things are meme coins, but that really is kind of irrelevant because you can make an argument that meme coins are just more bald-faced ICOs or DeFi yield farming protocols, right? Like they're just not trying to even have any sort of pretensions about what the point is. So to me, this is almost indicative of a larger narrative trend that Ethereum is really losing a lot of ground in the larger cryptocurrency market and culture, for lack of a better word.
The next time we do this segment, I'd like to request to go first because I agree with both Nick and Colin, and we're going to basically say the same thing. This feels to me like competitive forces are playing out. The predominant Solana wallet, Phantom, was basically spearheaded integration with the Runes Ordinal community, where you can sort of connect to marketplaces like Unisat and pretty easily do the types of transactions that you need. Which, like, an interesting side note out of this is that Taproot adoption is kind of on the rise because of this. And so the types of developers that these companies actually use, type of developers these companies need to hire, right, have to be kind of deep in the weeds of how Bitcoin script works and how to construct the right kinds of transactions, right? Because they're using more advanced formats that have been soft forked in and weren't a part of kind of legacy transaction types. They're taking advantage of kind of the full features of the newer soft forks. And I think part of the reason why kind of these companies are looking to dip their toe into this space is because just there's been troves of venture capital spraying into the Bitcoin L2 space. And so I think the expectation is that there will be more and more applications on layers like Babylon that Nick mentioned, which is certainly using Taproot and how they work, as Colin has thrown up on the screen. And it's, can we capture some users in these wallets that support many different chains? If some of the kind of traditional L1 Bitcoin wallets decide that they don't want to have integrations with some of these L2s for one reason or another, right? Which we know that, in the Bitcoin communities, people sometimes kind of pick and choose what they want to support. And so I don't think that's far-fetched. And so I think they're just trying to acquire as many users as possible and compete. And we'll see how it plays out.
Fantastic follow-up analysis there, Matt. And good point on the Taproot address.
That's why I gets paid the big bucks. That's all I have for the Cry Corner. I love that story.
It's interesting. And then we're going to be keeping an eye on, plan on getting a little blurb out on it for tomorrow's newsletter. But with that, I think we're a wrap, gents. Anything else to add before we hop off for the weekend?
Like and subscribe. Follow us on the YouTube channel.
Subscribe to the newsletter. Follow all of our wonderful panelists on Twitter. Matt, Nick, where can people find you?
You can find me at #_Bender or just at Luxor.
I don't know my @. I will be completely honest. I'm
rarely Matthew K. Williams. I actually know it.
No, he changed it recently. It's
I'm BC1 Matt. That's what I am. I'm BC1 Matt. Yeah.
That's a good handle. But anyway, all right. And you can find us at The Mining Pod and at Blockspace Pod. And with that, we wish you all a happy weekend, and we'll see you all next week.